welcome back to If Your Car Could Talk with Morley Fletcher, president of Santa Fe Kia. I'm George Lovato Jr., and we're going to talk cars and credit today, Morley.
Credit.
Yeah, credit, the magic subject with all the secrets to it, okay? Being a banker, we deal with credit all the time. You deal with credit all the time. It's an important consideration. Let's start off with what effects does credit have on you when you're buying a car? What are all the things that you need to consider when you're getting ready to buy a car and you look at your credit report and your score and all that good stuff?
Well, that's it's kind of a loaded question. There's a lot that goes behind that. People today, because of our technology age, digital age that we're in, people have the ability to get information that they never got before. So there are apps, phone apps out there, or tablet apps that allow you to go in, subscribe, and then look at your credit.
Right.
Some of the apps are third party that do give you your different credit bureaus, and then there's an app that is directly from a credit bureau. So people tend to look at those. It's a good way to look at your credit, see your payment history, make sure everything's okay. But when it comes to credit scores, that's where the issue comes into play as to what actual credit score. Because as you know, today we do everything by credit score.
Right.
The higher your score, the better off you are, and the lower your score, the worse off you are. But there's a tremendous difference in a lot of these scores because
From Equifax to
TransUnion to Experian, the difference is there's a version that these credit agencies use. Just like any software version, there's a version that they use. There's the latest version out there. And oftentimes the apps don't run the latest version. So the scores could change because of that. Could be higher, could be lower because of the version. And then the apps that we look at.
In other words, when you say version, each one has their own metric system that they use
Correct.
to interpret the score. Hence, that's why they're all different, because those programs
Correct. And then the version will change when they change their back-end analytics, and then that changes or updates that version. Just like updating an app on your phone. A new version, you got to update it. These apps are subscribing to the credit reporting agencies, so they will run their version of what is coming from the credit reporting agency. So it may not be the exact same version.
It's going to be yet another interpretation.
Exactly.
Okay.
Exactly. Okay. So when it comes to that, we need to pay attention, number one, to what version it is, which we have no control over. It just is what it is. But then we also have to pay attention to where we're getting our information. For example, Credit Karma is a big credit reporting app that is mainstream, that many people use, and they look at what their score is. These app developers, they don't do this out of the kindness of their hearts. They're a business too. So they get their money because most of us subscribe to these on the free version. So they've got to get their money somewhere, right? So then they rely on advertisers. Hey, kind of like us when we go to commercial break. So they rely on advertisers. The advertisers that they rely on are heavily driven by credit card companies. So consequently, when the credit card companies, they want to sell you a credit card or approve you for a credit card, so that credit bureau that is being run with Credit Karma is a credit bureau. Now, imagine this. We have credit cards, we have automobiles, we have homes. Three big ones, right?
Right.
There are three different sequenced bureaus for each one of those. There is a credit card credit bureau, there is a real estate credit bureau, and there is an auto score credit bureau. So depending on what you're doing, your score may change. So if your score is, say, 700 on Credit Karma, and then you go to a car dealership and they pull your credit score could be a little lower, could be a little higher, because that's based on the auto score. That's what auto dealers subscribe to, is the auto score, because that's what the banks want to see.
Right, right.
So there's discrepancies in the scoring. It's not a huge discrepancy. I mean, we're not talking hundreds.
Right.
We
right.
talk maybe in the tens or 20s, but there can be a discrepancy in scores. So when we talk about how can your credit affect things, the higher the score, the lower the rate. That's just basically
it almost seems counterintuitive.
It is.
Here you are. You've got a low score, and they're going to charge you more, which makes
Right.
it harder on the buyer. We're going to come back after these words. We're going to pay some bills here, and we're going to talk about what that score means right after this.
Hi folks, Morley Fletcher here, owner of Santa Fe Kia. At Santa Fe Kia, we like the byline of Santa Fe Kia is where we treat you different. Some reasons why. I'm remodeling our facility to make it better for our customers. Our salespeople treat people with respect and the way they'd like to come and purchase a vehicle. That's why at Santa Fe Kia, it's where we treat you different.
Raising Cane's invites you to grab life by the chicken fingers. So get out there. Be you. Do you. Embrace whatever makes you, you. All while enjoying Raising Cane's hand-battered cooked-to-order chicken fingers, crispy crinkle-cut fries, buttery Texas toast, and that secret recipe cane sauce that makes everything that much better. So go on. Savor the day.
Raising Cane's chicken fingers. One love.
Well, I'm going to the frontier, walk up to the cashier, order up a root beer and a number one. Cover it with green stuff, one scoop is not enough. Find a booth that's real tough, backed by the Duke. Meet my family, meet my friends in the quirkiest restaurant I have ever been. All of Albuquerque's favorite spot, it's the Frontier Restaurant.
The Frontier Restaurant is a proud supporter of ProView Networks.
Welcome back to If Your Car Could Talk with Morley Fletcher, president of Santa Fe Kia. We're talking credit today, and credit's an interesting subject. There's so much information to credit. I used to talk to clients about this and the importance of it before the internet. Now with the internet,
It's made it worse?
It's made it worse. It's made it worse. So let's talk about what that score means. So, you got fair, good, better, best, all that good stuff. What does that tell you when you see that score?
Well, the score is not the end-all, say-all, obviously. There's
Right.
a lot that goes into that. But all the analytics of the credit and how it's paid and the duration and the high and the low and all these things that come into play, then when the analytics kick in, it gives it a score. Obviously, the higher the score, which can go up to 900, which I've never seen before, just so you know.
I've never seen one.
But the higher the score means the better your credit is. And then the lower the score, which it starts at 299, which I've never seen one of those either, that means that you've got less than acceptable
299,
credit.
you don't even have a heartbeat anymore.
No, no. So there's a lot that score tells us, and everything in between. So the higher the score, the lower the interest rate. The best rate you can get is for people that have high credit scores, usually a 700 or 720 and above.
When you read the credit report, now we're going past the score a little bit, and we're
Right.
going to talk about when you read the history of the performance of credit. What are the things that you look for, i.e., good and bad?
Well,
On the
there's things
detail.
that we look for in the automotive industry as a whole. We look for what is the individual's high credit. How much have they borrowed in the past in one lump sum? Obviously, if we think about it for ourselves, if we're going to loan somebody money and somebody has never borrowed a large amount before, we're not going to give them a large amount and be the first one to try it out.
Yeah.
We
Yeah,
generally
good point.
want to see a history of, okay, could this person pay back $25,000? Then maybe the next time this person can pay back $35,000. To jump into something and expect, if you've never borrowed a large sum before and a bank is going to give you $50,000, $75,000 just because you paid some credit cards well, then that goes into the bottom part of the credit, not just the score. You could have a high score, but no history of repayment of a large debt. So there is a lot more that goes into the credit than just the credit score.
Now, when you look at that detail, things like charge-offs, so on and so forth, where there's been bad performance, can you still get someone financing?
Yeah, and that's kind of a good thing. We have different types of lenders. They score them, and many people know there's A, B, C, D lenders, and then total subprime. But there's different lenders that look at things a little bit differently and give people that have had some issues in the past an opportunity. And at Santa Fe Kia, we deal with 20 different lenders and then all the credit unions in the state, even some credit unions in Colorado and Utah. But everybody's a little bit different. So we deal with the number of lenders that we do because everybody that comes in to see us is a little bit different. Some have never had an issue in their lives. Others have had some health issues or accidents or things that cause them to not be able to be completely on time.
Got it.
And it's not their fault. It's kind of out of their control. The good Lord decides if we're sick or not. And, accidents do happen. And, in the case of COVID, there were layoffs and there were people that didn't have an income. So there were a lot of things that come into play that if somebody has less than perfect credit, it doesn't mean they're a bad person. It just means they had some issues. The great news is we have lenders that understand that too, that we're able to deal with. Now, oftentimes the rate's a little bit higher than what we'd like.
Like I was saying earlier, counterintuitive. Punish the guy with the bad score. Yeah.
Exactly. But really what it comes down to, George, if somebody's looking for a new vehicle or new to them,
Right.
If they can afford the payment and it's okay and they can budget for that, then the rate really doesn't matter. Because honestly, if we looked at a $100,000 car, does it matter if the rate is 20% or 2%?
Right.
It's all about what the person can afford in their monthly payment.
I had this happen just recently, and I want to talk about the importance of knowing what's going on with your score. But I was talking to a client that's borrowed millions and millions of dollars, is getting ready to borrow millions more. And I asked him, how's your credit? And his response was, I have no idea. I don't pay attention to that stuff. Explain why it's important to pay attention to your credit.
Well, I can say from personal experience, I don't always pay a whole lot of attention. The bills come in, the bills go out. You get your bill, you got to pay it. It just goes, and you kind of just know what you're doing, right? And you know you have to make your payments. But sometimes things happen that we may not even know what's going on. There could be some identity theft issues. I mean, that's run rampant these days. The digital age and technology is fantastic. But there are those surly figures out there
Sure.
that like to take advantage of situations and advantage of regular people. So it's important that you keep up on your
You
credit,
monitor your
so you
credit
know what's
history.
happening. And the minute
Right.
that you see that there might be an issue, you need to raise the flag, hit the button, dispute, and lock everything down and pay attention to what's
Right.
going on. And these apps will help you to do that as well. So they're not just there to sell you a credit card or give you a pretty number.
Yeah. You were telling me the other day when I was up at the dealership, we were talking about Capital One, and that they're the ones that can run specials. They pre-qualify some of your customers for purchasing an automobile. A credit card company getting into the automotive space. And you said that's been around for about 10 years.
Yeah. It's been
Is
around
it popular
for
with
about
other
10 years.
cards too?
No, believe it or not, Capital One or Cap One has kind of cornered the market
Have
on
they?
that.
Yeah. I found that really unique.
They are unique. They're pretty solid credit card company. They do people well. They'll give first time card holders a card with a low balance, and then as they continue to pay, and they'll increase their limits based on payment production. But then they take all of their credit card holders, and they will pre-qualify them on auto loans, and they'll send things out to them via email or snail mail that they're pre-qualified for auto loans, and then if somebody has interest, they'll send them to dealers that deal with
wow.
Capital One to
Yeah.
make it
They'll direct them
seamless.
then
Direct them to one
Right.
of the dealers,
Interesting.
and then the dealer is able to take that customer, put it into the Capital One system, and it pulls up the
Well, that's
auto
good for
approval.
our audience to know.
It's
that-
fantastic
yeah,
because there are so
that's
many
great.
avenues out there. You never want to just look at something you get in the mail or on your email and say, okay, well, I'm going to do that. Well, you need to shop that as well to make sure that you're getting the best deal for you, the best bang for your buck. But there are a lot of these services out there now that do things automatically because of the technology.
I like that. We're going to come back and talk about what we can do if we have bad credit to repair it, or to at least get in a position to where everything's explainable that's on it. But we'll be right back after this, and we're going to talk more about credit today. See you in a bit.
Burrito Express is proud to announce that we're the official burrito spot of ProView Networks. Since 1982, with 6 locations serving Albuquerque, Rio Rancho, and Roswell, the question is, red or green? Let's go to the burrito. Visit letsgototheburrito.com and order now. Eagle Greens and Turf are a family-owned and operated business with over 25 years of experience in the home improvement industry. They are your exclusive dealer of celebrity green, synthetic putting greens, and artificial turf. They also have artificial turf that is specifically designed for your pets. Eagle Greens and Turf are proud sponsors of ProView Networks and can make your lawn green all year long at 505-273-2744.
back with If Your Car Could Talk with Morley Fletcher, president of Santa Fe Kia. And we're talking credit today and all the options that you have to monitor your credit, to make purchases utilizing your good credit standing and maybe not so good standing. Let's talk about not having a good standing, Morley. Let's say your credit's low, you're in the high 500s or the low 600s. What are the things you can do to sort of correct that course? What's out there for the consumer?
You know, there are a number of things that, because there's so much that goes into the score, and it could be, during the break we were talking about debt capacity. Well, maybe somebody doesn't quite have enough debt, meaning maybe they don't have things that they've purchased and paid off before. Maybe they have one credit card when, you know, if they had a couple of more with some, maybe some zero balances, but available credit on them that has gone along, that will increase the score. Sometimes a little amount of credit is not the best thing. Sometimes you need a little bit more reporting to your credit report to give you a higher score. So there are
You were
things.
talking about experience earlier, whether they have the experience with borrowing a
Correct.
large sum of money. You want to see that experience.
Correct. And, you know, here in New Mexico, we all have credit unions that we deal with, more than any other state that I've ever been in. And I myself, we have 2 credit unions that we deal with right here in New Mexico. And oftentimes going to your credit union and getting a signature loan or an unsecured loan for just a small dollar amount, a couple $1,000s. Maybe
borrow
use it, go borrow it, use it to build a fence for your backyard or something like that. Pay it back. You don't even have to take it to the extent of paying it over the entire term.
Right.
You can pay it half the term. It's easy to pay back a couple $1,000s in a short period of time. That will increase your score.
Then there's these apps out there now that, you know, like Credit Karma, they say they can help you repair your credit and improve your score, so on and so forth. Are there any ones that you like more than others that you think the consumers will benefit by?
I'm not a proponent of those.
No.
Quite honestly, the thing that a lot of these credit help or credit repair agencies, what they're doing is they're negotiating with your lenders to take a lesser dollar amount than what you actually owe.
Yikes.
So what happens is sometimes they'll have you go delinquent purposely so that they can negotiate a lower dollar amount with these lenders to take less money than what you actually owe, and then
Then they
you'll pay
re-amortize
on that,
lower
re-amortize
balance. Yeah.
it, your payment's lower, and then
Right.
you pay that debt off, and then your debt is done. But it hurts you in the meantime.
It hurts you because the lender's reporting settlement.
Settlement
yeah.
and late payments and the like. So all of that is going to reduce your score once all is said and done, but it takes years. Then the score will gradually increase because that's been paid off.
This is going way back. I don't even want to tell you the year because it'll really age me a lot. But I was about 27 years old, and I had a Ford Motor Credit line of credit, a fleet line. And it was for a substantial sum of money when you're in the rental car business. You know, that was when a car used to cost $14,000.
Right? Yeah.
My score was always low because of this. I was on this enormous line of credit for my rental car fleet, and they would Ford Motor Credit, the guy that was in charge, it was over my account back in Detroit, would say, "We know why that's there. It's because of this big, huge monster you've signed on, you know," and it was substantial. Talk about when you get credit up very high, how that begins to affect your history, your score, so on and so forth, when maybe, you know, there is a thing as too much debt, right? So talk
Correct.
a little bit about that.
You know, that's a great question and a great topic. oftentimes we just pay our bills as they come in the mail, or they come across our email, or we have auto pay set up, and things just happen automatically. And sometimes when you have higher debt capacity with credit cards, you know, a big limit,
Right.
And then that creeps up to the limit, and then it takes a while to whittle that back down, because obviously if you're just making your minimum payments, that's
a good
really
thing.
not gonna, you know, your credit card rate of interest is high, so you're not paying that much principal down. So you make extra payments to pay that principal down quicker. But it takes a bit of time to do that. Now, as our actual debt goes up, not our limit, but what we've charged on those cards, that goes up. And then maybe we bought a boat, or we bought a motorcycle, or we bought a side-by-side.
Furniture.
Furniture, because everybody has these special finance rates. Even the furniture people have, you know, 0%
yeah.
for, you know, whatever amount of months.
No payments for a year.
Right. But then that shows on your credit, and it shows on your credit as a top line, meaning you're at your credit limit, and then you start paying that down from whatever the purchase amount was. So that will affect your credit score and bring that down. You may pay your bills, you may have everything current and on time, but if you're at your limits on everything that you have,
Right.
then it's going to drive your score lower, even though you have the capacity to pay and you pay your bills every month. Until those balances start coming down, that score's not going to go up.
This is many years ago as well. One of my real close buddies in New York used to work for Citi in the early days of when Citi was really pushing their credit card out there.
Right.
They were very aggressive, and we would ride the train together out to Long Island, and he would have these. This is the day when you used to have those big spreadsheets, you know, that would print out the blue and white striped paper. And I was asking him one day, I said, "What are you analyzing?" And he said, "I'm analyzing the losses." And I said, "Well, what's your loss rate?" He says, "Precisely what we predicted. Precisely what we predicted. We know we're going to lose X percent of our total gross portfolio based on some form of default or non-performance, but we are exactly where we predicted." Hence, I said, "How do you get there?" And he said, "It's interesting that you asked that." He said, "We look at putting the credit out there, and we wait and see how the whole thing performs over time." And so you mentioned this about Capital One, and I was surprised and shocked, but I'm sure they have a predictable amount that they're expecting to lose based on these people that borrow too much and can't pay off their credit card.
Well, I'm sure that they do, and you know, Capital One, it got into a little bit more diversity than some of the other credit card companies, because in reality, what is credit card debt? It's unsecured, right? They're not going to come knock on your door and say, "Hey,
Take your first
can
newborn
I
child."
have? Yeah, let me have those shoes you bought 3 months ago that you haven't paid for. Let me have those back."
Yeah.
So they diversify, and they get into more secured
Which mitigated
loans,
some of their losses. and
which
whatnot.
did.
Well, listen, we've had a great discussion today on credit, and I think we've informed you a lot on what your options are, what you could do to maintain your score, improve your score, and some programs out there that are available for you when you do decide to go out and buy a car. So thanks for joining us today. This is If Your Car Can Talk with Morley Fletcher, President, Santa Fe Kia. See you again soon. Bye-bye. How far over?
Hi, folks. Morley